So the UK budget has come and gone, and the markets haven't really taken too much away from it. These events are now well headlined in advance, so we knew pretty much what the broad sweep of things were going to be. It will draw people back into the workforce. That was how it was billed, this particular budget. Scrapping the lifetime allowances on tax-free pension contributions, currently just over £1 million. So that means that it could well see some people coming back. In the medical sector, for example, doctors were particularly concerned about the fact that their pensions were in excess of that amount, which would have attracted large amounts of income tax. Free childcare for 30 hours a week for working parents is being expanded to cover children from the age of 9 months to 2 years, but will only be fully implemented by September 2025. That's going to cost money, but getting people back to work, according to the Chancellor, is by far and away the best thing to do. Fuel duty has been frozen as well for another year, and government help with energy bills is being expanded for another 3 months. So that means that some of the cost of living crisis that we've seen will continue to be supported by some government initiatives. There'll be funding will be provided for up to 50,000 places on a new voluntary employment scheme for disabled people. So that's getting more people back into the workplace, with support being offered to employers who bring disabled people onto the workforce. I think for me, one of the big things was the OBR expectations. The economy is forecast to grow by 1.8% in 2024 and 2.5% in 2025, while inflation is expected to fall from where it is at the moment, around about 10%, down to 2.9% by the end of this year. Now, that'll be good news for the Bank of England, who's been raising interest rates and looks like it's set to continue to do so for the foreseeable future. But I think the broad sweep of things is it means that not an awful lot has happened. For me, one of the big moves in the markets has been, if you take what's going on in the foreign exchange markets, this is sterling against the euro. This has been one of the biggest movers, I think, for sterling in the session in today's trade. This is the daily chart showing daily candle moves, and we moved up from 113 to 114.36. So we've seen over a cent up for sterling against the euro. So far as sterling is against the US dollar, you can see we're down for sterling today, but not by a massive margin. In amongst some of the other moves we've got, the big moves of the day, of course, are in amongst the indices. And this is nothing to do with the budget. This is purely about the banking sector, how resilient it is. One of the big things I know that many people are pointing to is the fact all the work that's been done by the Bank of England and the Treasury to try and encourage banks to put aside lots of money in the event of real problems. We've seen Credit Suisse problems today, and this has pulled the banking sector down again. But the mid 250 index, the mid cap 250, really hasn't moved on the budget. So I think the message is from the budget, steady as she goes, nothing unusual. The markets haven't really moved on that as we await the Bank of England interest rate decision next week.